Should your company hold Bitcoin? The $91 billion corporate revolution that's changing everything today, I'm going to show you why 125 companies just put $91 billion into Bitcoin. This isn't some tech bro fantasy anymore. We're talking about real companies making real money. And the numbers will blow your mind. But here's the twist. Half of them might be forced to sell soon. Let me explain. Look, I need to tell you something that's happening right now in corporate America. And it's either going to make you a lot of money or lose you everything. 125 public companies just put $91 billion into Bitcoin. That's billion with a B. And they're not doing it because they're crypto fanboys. They're doing it because the old playbook is broken. Think about it. Your company has cash sitting in the bank. What's it earning? Maybe 2%? Meanwhile, inflation is eating it alive. These companies figured out something different. Let me break this down for you, because the numbers tell a wild story. The numbers that will shock you first. Let's talk about who's actually doing this. MicroStrategy leads the pack with over 576,000 Bitcoin. That's worth more than $60 billion right now. Their CEO basically bet the entire company on Bitcoin. Either he's a genius or he's insane. But it's not just them. Marathon Digital has 46,000 Bitcoin. Tesla still holds 11,000. Even a Japanese company called Metaplanet jumped in with 16,000 Bitcoin. Here's what blew my mind. Corporate Bitcoin adoption grew 58% in just one quarter. That's not slow adoption. That's a stampede. And these aren't small bets. We're talking about 847,000 Bitcoin total. That's 4% of all Bitcoin that will ever exist. Gone. Locked up in corporate treasuries. But here's where it gets interesting. These companies aren't just buying Bitcoin and sitting on it. They're creating entire new business models around it. The new business model C. These companies discovered something. When you hold a lot of Bitcoin, your stock price starts moving with Bitcoin. Sounds bad, right? Wrong. Investors are paying crazy premiums for these stocks. MicroStrategy trades at a 75% premium to its Bitcoin value. Metaplanet? 384% premium. That means for every dollar of Bitcoin they own, investors value the company at almost $5. Why? Because these companies give you Bitcoin exposure plus upside. It's like buying Bitcoin with a turbo boost. They even created new ways to measure success. Forget earnings per share. Now it's about Bitcoin per share. Forget revenue growth. Now it's about Bitcoin yield. MicroStrategy's CEO calls it digital capital. He says Bitcoin is the best treasury asset because it's the hardest money ever created. But here's the problem. Remember that Standard Chartered warning? It's real. And it's scary. They looked at all these corporate Bitcoin holdings and found something disturbing. Most companies have a pain threshold at 22% losses. That's when they typically sell. Right now, 61 companies hold over 673,000 Bitcoin. Half of them bought above $90,000. If Bitcoin drops to that level, we could see forced selling. We're talking about $775 million in liquidation pressure. And it's happened before. Core Scientific had to sell their Bitcoin in 2022 at exactly a 22% loss, just like Standard Chartered predicted. But here's what's really wild. The biggest tech companies looked at Bitcoin and said no. The Great Rejection in May 2025, Meta shareholders voted on adding Bitcoin to their treasury. Want to know how that went? 99.9% voted no. That's not close. That's a massacre. Only 3.92 million votes said yes. 4.98 billion said no. Microsoft and Amazon had similar results. So what's going on? Are these tech giants missing out or are they being smart? The Meta shareholders basically said Bitcoin is too risky for a stable business. They want predictable returns, not 80% swings up and down. But the Bitcoin companies say that's exactly the point. You want the volatility. That's where the returns come from. The volatility reality, let's talk about what Bitcoin volatility actually means for your business. Bitcoin used to swing 400% in a year. Now it's only 30 to 80%. That's still insane compared to stocks or bonds. But here's the thing. Over time, Bitcoin has crushed every other asset. While gold went up 80% from 2020 to 2025, Bitcoin went up 800%. That's 10 times better. The Bitcoin companies argue that missing out on those gains is the real risk. They say holding cash is guaranteed to lose to inflation. Bitcoin gives you a chance to win. But that volatility hits your books every quarter. And in 2025, new accounting rules made it worse. The accounting nightmare this is where things get technical but super important. New rules from FSB require companies to mark Bitcoin to market every quarter. That means if Bitcoin goes up, your earnings look great. If it goes down, you lose money on paper. MicroStrategy stock now moves almost exactly with Bitcoin. When Bitcoin has a bad day, their stock gets crushed. When Bitcoin pumps, their stock goes crazy. For stable businesses, this is a nightmare. Your quarterly earnings become a Bitcoin price tracker. But for companies that embrace it, it's a feature, not a bug. They're basically becoming Bitcoin investment vehicles with a business attached. Who should do this? After looking at all the data, here's my take on who should consider Bitcoin Treasury strategy. First, you need a strong balance sheet. If you're barely cash flow positive, don't even think about it. You need cash you can afford to lose. Second, you need a long-term view. Bitcoin works over years, not quarters. If your board wants steady quarterly results, Bitcoin isn't for you. Third, you need risk tolerance. I'm talking about watching your treasury lose 50% in a few months and not panicking. Fourth, you need conviction. If you don't truly believe Bitcoin is the future of money, you'll sell at the worst possible time. Who should avoid this? If you're in a regulated industry, be careful. Bitcoin still has regulatory risks, even with Trump supporting it. If you have debt or tight cash flow, stay away. You can't afford the volatility. If your shareholders or board are conservative, don't do it. You'll get fired when Bitcoin has its next crash. If you bought at high prices without conviction, you're in danger. When Bitcoin drops, fear kicks in. And fear makes you sell at the bottom. The implementation strategy, if you decide to do this, here's how to not screw it up. Start small. Don't bet the company like MicroStrategy. Start with 5 to 10% of your cash reserves. Use dollar cost averaging. Don't buy all at once. Spread it out over months or even years. Get your accounting systems ready. You'll need to report fair value every quarter. That means your Bitcoin gains and losses hit your income statement directly. Prepare your board and shareholders. They need to understand this is a long-term play. Quarterly volatility is expected. Consider custody carefully. Self-custody gives you control, but adds security risks. Institutional custody costs money, but reduces operational risk. The real question here is what this all comes down to. Do you believe we're moving to a digital economy where Bitcoin becomes a standard treasury asset? If yes, getting in early gives you a massive advantage. You get Bitcoin at today's prices, plus you get investor premiums for being ahead of the curve. If no, you avoid the volatility and sleep better at night. But there's a third option. What if you're wrong about Bitcoin going to zero? What if it becomes the global reserve asset and you missed out? The liquidation risk, let me come back to that Standard Chartered warning because it's crucial. They identified exactly which companies are at risk. It's not all Bitcoin companies. It's the ones who bought high and don't have strong conviction. The companies that will survive are the ones with strong balance sheets and long-term vision. The ones that will get forced out are the ones that jumped in for quick gains. This creates a unique opportunity. When weak hands sell, strong hands can buy at discounts. The network effect here is something most people miss. As more companies adopt Bitcoin, it becomes safer for everyone else to adopt it too. When only MicroStrategy held Bitcoin, they looked crazy. Now with 125 companies, it looks strategic. Each new corporate adopter reduces the risk for the next one. It's a network effect that feeds on itself. The regulatory environment is changing fast. Trump's administration is Bitcoin friendly. The SEC is backing off. Clear frameworks are emerging. This reduces one of the biggest risks corporate treasurers worried about. Bitcoin isn't going to be banned. It's going to be regulated like any other asset. The performance metrics, if you do adopt Bitcoin treasury strategy, you need new ways to measure success. Bitcoin yield measures how much Bitcoin per share you're accumulating over time. If you're issuing new shares to buy more Bitcoin, this number better keep going up. Bitcoin NAV is your net asset value based on Bitcoin holdings. This shows the pure play value of your Bitcoin strategy. Premium to NAV shows how much investors are willing to pay above your Bitcoin value. Higher premiums mean the market believes in your strategy. The final calculation, so what's my verdict? Should your company hold Bitcoin? If you're a mature company with excess cash, strong balance sheet, and long-term vision, Bitcoin makes sense as 5 to 10% of your treasury. If you're a growth company that needs operational flexibility, stay focused on your core business. If you're in financial distress or have conservative stakeholders, Bitcoin will create more problems than it solves. The key insight is this: Bitcoin Treasury strategy works for companies that embrace volatility as a feature, not a bug. It doesn't work for companies that need predictable quarterly results. The bottom line 125 companies and $91 billion prove corporate Bitcoin adoption is real. It's not going away. The question is whether your company should be part of it. The data shows it can work spectacularly. MicroStrategy turned a software company into a $60 billion Bitcoin play. But it also shows the risks are real. Half the corporate treasuries could be forced to sell if Bitcoin hits $90,000. The companies that will succeed are the ones with conviction, strong balance sheets, and long-term thinking. The companies that will fail are the ones chasing quick gains without understanding the volatility they're signing up for. So ask yourself, is your company built for a Bitcoin treasury strategy, or are you better off focusing on what you do best? The revolution is happening. The question is whether you're ready to be part of it. That's the real choice facing corporate America today. And the clock is ticking. And that's the complete breakdown of corporate Bitcoin treasury strategies in 2025. As we've seen, 125 companies holding $91 billion in Bitcoin proves this isn't just a trend. It's a fundamental shift in how forward-thinking businesses manage their treasuries. Whether you're considering Bitcoin for your company's balance sheet, need help navigating the implementation process, or want to discuss how this strategy could fit into your specific business situation, I'm here to help. If you'd like personalized guidance on corporate Bitcoin adoption, treasury management strategies, or any of the topics we covered today, I'm offering complimentary strategy calls where we can dive deeper into your unique circumstances. You can book your free consultation at strategy7.io. That link is in the description below. We'll analyze your company's financial position, discuss risk management approaches, and create a customized roadmap that makes sense for your business. Thanks for watching, and remember, in a world where 82% of companies are planning to use AI agents and corporate Bitcoin adoption is accelerating,